We're going to talk through the delta valuation that we did in class. So I'm just going to highlight a couple of things. First, when you go to Delta or any company to update the model, and you go to your FA screen, and you go to Custom, and you go to the model data, more model data, it's very important that you only have these 6 years worth of data points in your individual model as part of your individual assignment. So first of all, settings. If I go to the data tab, all of these things need to be unchecked, and the periods for export should default to 6. And if you don't do that, then you're going to have trouble with your export, right? Because you're going to have the forward years in there, we have too many years in there, and you'll have to cut and paste, and it'll make your life difficult. So just make sure that that is there in the export. This was your individual assignment. As a matter of fact, I think what I'm going to have the TAs do, just to make sure that nobody violated the honor code on this, is if you have a tab on there that's called shared, and you're sharing this with other people, and if you turn that in, that is an honor code violation. So just make sure that you didn't do that and that you individually created it, because these are individual assignments. So if you're sharing tabs across with other people for individual assignments and we find out about it, it's actually going to be an honor code violation. So I just want to be really clear about that, because I'd hate for that to happen to you. Anyways, so back to this. So you export the data, you put it into Excel, and then once you do that, you go to Delta Data, which is what I did, and then the other 3 screens. I'm going to open up the CAT model to quickly show you how you take the CAT model we finished up. Now, I know you all did this, but I'm just putting it on video to make sure that we accurately did this. So if you take the Model Data tab for CAT, and then you take the Delta tab that you just exported from your template, select Delta, copy, come in here, right-click, paste special values. This will overwrite it. Then you come in here to assumptions. Make sure that previous assumptions that we use for CAT then get overwritten. What is minimum? You need the WAC. In fact, somebody help me out with the WAC. What is it? 9.3? Yeah. Okay. Then you want to put in the right shares outstanding. Is it 582? How many? 778.5. Okay. So these should be coming, just for everybody else's benefit on the video, they should be coming from the WAC, so that's the 9.3, and then they should be coming from the DES, and that's the 778.5. And then down here, we need a current share price, which was $49.50 earlier. What's it right now? Somewhere in that range? $49.46. I'll call it close to that. So again, depending on time of day, you have a slightly different price. For the revenue for 2016, you should get this off the EEO, which was what, 4666 and 42003. Okay, and for the EBITDA, 10318. And for 2017, 10572. Okay, so once you have that, then the final part is to go to the ratios. Now, what's important to understand about the ratios, and I'll shrink it just so it's a little bit easier to see in the video, is that the data out here in the yellow fields is what was left over from what we did with CAT on Monday. All right, so even though we updated Delta's data, and even though we had the first 2 years of EEO in there, the forecast periods were still hard-coded, so we'd have to overwrite those. So these were the CAT growth rates we did in the as-is. These were the CAT margins, and we'd have to update that. We'd also have to come up with a realistic tax rate. So a couple quick things. One, obviously they're not going to pay a negative 35% tax rate and get a refund every year into infinity. That wouldn't make any sense. So again, Delta and all the other airlines lost a lot of money. They had some net losses and some NOL carry forwards. That's why they had some weird taxes. Last 2 years, as airlines have been profitable, I think are more representative. So I just need a representative tax rate. So I'm just going to keep it simple, be a bad analyst, say somewhere around 37.5% might be reasonable. Notice how that share price went down dramatically and is now much more reasonable. right? Because when I get a cash refund of 35% of what I make every year versus paying 35% in taxes, that's a big cash flow swing to a business. Right? And by the way, this is what I mean by the legacy assumptions when we reuse this model you got to be careful about. That's why we highlighted all these tabs in different colors, because if I leave in some accidental things, it can do some really bad things to my model. So same thing, for the growth rates, let me at least use what the growth rates were as a starting point. Copy and paste this over. Let me use as the margins, copy and paste this over. And then that would be my, I guess what I call my baseline. Now I'm starting to do my as is. So I'm at, and again, I'll make this bigger once again. Starting to zoom in on some things. So right now I'm at 72. Share price is closer to 50. So obviously I need to do some things to get the revenue, or sorry, to get the share price down. All right. So just again, very quick. I know you guys just spent some time doing this. Hopefully everybody was able to do this. But questions at all about what we just did? All right. So this is what I mean by articulating a story of assumptions, right? So I'm trying to do an as is. I'm trying to understand why Delta is trading at 50 and not 72, okay, which is where I'm in the baseline. I'm trying to get to the $50 share price plus or minus a little bit, $49.50. So what is going to get me there? And as I said, three things. Tax rate, well, I just put in 37.5%, so I think that's pretty reasonable. So it's probably not a higher tax rate than that, plus or minus a little bit. It's the revenue or margins. Do I think the revenue is going to actually go down dramatically? Do I think I'm going to get to $50 by dropping revenue? Again, I would have done research. We're being bad analysts because we don't have much time. But do I think it's really going to be a big revenue drop? So it's probably margin drop. All right. Now, here's another reason why I might think it's a margin drop. Let's go back to our Sesame Street days. One of these things doesn't look like the other. The what? Out of the three grayed out. Just look at the data points. Do you see anything that kind of jumps out at you? Yeah.
The 2015 EBITDA is a lot higher than like the previous historical.
That's right. That 2015 EBITDA margin is double historical average. So one, I want to go back to my model and say, did something get screwed up in my model? And I'll give you a hint, no. Because the analysts are predicting that for the next 2 years. So what do you think caused that?
Low oil prices.
Yeah, oil prices went to what? 30-something a share, so or 30-something a barrel. So basically, the biggest cost input for airlines is oil, and the cost of oil went down dramatically, and so that really boosted their margins. Okay, so this is what I mean by articulating assumptions. So one of the things that's going to drive transportation stocks in general, and one of the things that's going to be a key driver of Delta Airlines in particular, is the price of oil going forward, right? Because that's going to have a big impact on the value of Delta Airlines, much more so than passenger volume or anything else. So what is your view on the price of oil? What do you think the market's view on the price of oil is going to be? Look at the share price, look at the margins, and tell me. To get to that share price, look at those margins in this row. Are they going to maintain those margins in the future? Does the market believe at this share price they're going to maintain those margins in the future? So what do you think the market is thinking about the price of oil in the future? Yeah, it's probably going to rebound. It's going to go up. Cyclical market. So yeah, it's low. Do you think the market's going to think that oil is going to stay relatively low for the next couple of years? Look at data. So now we're going to be telling the story. I would say it the other way around, but what data on here might support that the market thinks oil is going to stay low for the next couple of years? Yeah.
Oh, the 16, 17 assumptions based on projected revenue and EBITDA.
Yeah, particularly EBITDA. If the EBITDA for 16 and 17 stays at 25%. So for the next couple of years, people think oil is going to be relatively low. But then the share price drops to 72, so they don't probably think those margins are going to sustain. So short-term, good oil environment. Longer term, probably a little tougher oil environment. So that's the point. And this is what I mean by articulating a story, is that story is in their numbers. So if I'm the analyst, it's the exact opposite. Hey, when you value Delta Airlines, recognize that right now they're doing really well because the price of oil is low. And I think they're going to still do really well because the price of oil, my point of view, which other people might disagree with, is going to stay relatively low the next couple of years. And oh, by the way, what do I think is going to happen after that? Right now, the stock is priced, not that the oil prices stay that low, but let's do some math. Do you think the price of oil is going to go back to a point that drives Delta's margins back to 13%? Well, let's do a little scenario. Let's say it goes up, not as dramatic, but maybe it does. Spikes down to 20, then 14, then 11. Not 111, 11. Is Delta expected to go back to historical margins? That's a $9 share price. So what I could actually infer for this is the people that are evaluating Delta are probably not thinking that oil is going to go back to $110 a barrel anytime soon. But they don't think it's going to stay in the 30s. Okay? So it's probably somewhere in the middle. This is what I mean by the as is. So we haven't done some industry analysis, hence bad analysts, but I can tell you that I don't think that they're going to probably see 10, 15% growths, and I don't think they're going to see negative 10% declines. So I don't know if the answer is 3%, plus or minus a little bit. I think it's going to be on that. We can do our research, we can do our homework, we will, and we would support that. But what I really think Delta is, it's a margin story. It's not a growth story, it's a margin story. So what margin supports, approximate margin, supports $50 stock price? What do you think? Yeah, probably closer. Let me undo. Right when I was around 20, somewhere in that range is about the share price. Now, by the way, that's a lot higher than historical average. That's the as is. Okay? So here's the point. And I'm doing this quickly, right? But if I'm thinking about as is, what's my story with Delta? My story with Delta is that their margins have gone up dramatically because the biggest cost to the airline has gone down, which is basically their cost of oil. And their margins have spiked. And oh, by the way, there's only 4 major airlines in the U.S. that control like 80% of the market. And in that dominant oligopoly position, I don't think they're going to be price threatened anytime soon. Try flying out of BWI Airport anywhere not on Southwest. Good luck. Okay, I'm just saying, I'm flying out of Dulles to Chicago. Try flying somewhere out of Dulles that isn't going on United. Right? These guys have their fortress hubs. They've carved up the country, and so it's really hard to have price wars. So they set it up this way. They don't publicly say this, but that's the way the airline industry is. So here's the point. I don't think it's going to be a revenue issue. I don't think the margins are going to collapse. That's based on my assumption. I don't think there's going to be price wars. Oil's going to be the key input. I think oil's going to be a little higher. I think that's going to put some pressure on the margins, but I don't think we're going to go back to the tough days of a few years ago. Notice how I'm putting those assumptions into these numbers. That's what I mean by telling the story. Because there's a story in these numbers that is starting to come out. Now, do I agree with that? Me, individually, as I'm doing this. What do I think? Right? And this is where I go with the bull and the bear. If I go with the bear case, and they go back to the margins, which they did, which is entirely possible. If oil spikes back to $100 and they are where they were 2 years ago, sell. Get the hell out. That's the bear. And the driver of the bear scenario is $100 oil. What's the bull? The bull scenario is oil stays in the 30s, and oh, by the way, terrorism doesn't affect any of this. Okay? Because if people start getting afraid to fly, especially to Europe, where Delta's strong, or Latin America, where Delta's strong, because Brazil's a screwed up mess, right? So I'm going to Brazil next week. I hope I come back. When I'm there, I'll take pictures of the people that are basically in the street protesting the horrible political crisis that's going on. You got the Zika virus. Here's an interesting point, only half the Olympic tickets for Rio in 3 months are sold right now. Only half, 50%. That's a real problem for Brazil. And Delta is big down to Latin America. So I'm telling you, if demand is tepid and oil prices rise and Delta's going to have to discount to get people to travel, well, there's my bear case. And I already know that they could be a teen stock. So I got my range. Where do I think? Right now they're at 50. Where along that range do I think is likely to happen and why? So you tell me. What do you guys think? I've set it up for you. You guys did some analysis. Where do you think Delta ends up? Are they a buy? Are they a sell? Are they a hold? And why? Yeah.
Well, I wouldn't buy right now because I think they're doing pretty well considering the next few months that they might face.
Okay.
With everything going on, there might be like travel bans and with everything in Brazil. So I would say that right now you should either hold or you should sell.
So I agree with your story, but let's go back. As you're starting to articulate some risk there. But
Yeah.
given the risk, what assumptions would you put in here that you think are the most highly probabilistic? Are you more on the hold side of assumptions, or are you more on the sell side?
I would say I think that the 20% EBITDA is a little positive, like
Too high?
too high. So I would probably be more on the sell side.
Well, what do you think is a likely EBITDA margin? And then I'm putting you on the spot, and I know it's gut feel, but what is your gut feel?
I would say it has to be something a little bit closer to their historical averages, especially their averages with
So,
oil prices.
give me a number. 15, 17, 13.
I don't know.
Well, on your next assignment, you're going to have to put something in. So just practice. 15?
15? Yeah.
All right, so let's just say you think articulating the story you did is great, and then you get to 15, and now you're 25.
So you should sell.
What would you tell your mom?
To sell.
Exactly. So this would be the point. What would I tell a family member? All right, what would I advise somebody if I'm actually advising them to spend their money? And the answer is don't buy Delta. Like, there's just too much risk here, and here's why there's too much risk. And if their margins get to halfway between where they are and where they've been historically, this is a $25 stock. Right? So there's just too much risk in this for me. Avoid. Put your money someplace else.
How long you're in it for? Because I do think they're gonna make it out from this summer. So if you hold until next year at this time, they might be at 50 or.
Okay. So in the short term, all right, ride the wave, but you got to time it and you got to get out before people wake up and realize that you should get out of it long term. Is that your story?
I'm saying that for the short term, you should sell it.
Okay.
It's gonna go down from here.
And buy in the dip. Because when it gets down to this range, which I think it could, then you buy Delta and then you ride an upside.
That's what
Okay? So, but I'm saying, you got to, why story? Why story? Show data, show supporting information, weave it together. And by the way, none of us know what's going to happen. And that's what I said, this is what I mean, you have to get uncomfortable with the uncertainty. And the only way that you can articulate uncertainty is to start talking about the story, the ranges, what you're thinking, what your assumptions. Because the only way I can really evaluate her opinion is to look and listen to her and listen as she talks it through and look at the numbers that represent that. Right? And by the way, we don't know if we're going to be right, and we can always change our opinion later, but that's what these analysts actually do. Because as I said, the math itself, you did this and I did this in what, 6 minutes, 5 minutes? Like, it doesn't take long to do the math. And you're like, gee, this doesn't seem all that hard. The math is not the hard part, right? As I said, figuring out 12 numbers is not the hard part. Figuring out everything that goes into creating what those 12 numbers should be and defending that and explaining that and articulating that in an uncertain world, that's the hard part. It's interesting, and that's what we're going to practice, and that's what we're going to do. All right, questions about any of this? Okay, so where do we end up? Let's just do show of hands. So buy Delta. Anybody? Okay. Sell Delta. So sell, pure sell. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Hold Delta. See what's everybody else. And about 15. So more holds than sells. Just out of curiosity, this is Wall Street today. 15 analysts, all buy.
They not usually say sell though.
They don't like to say sell. Holds can mean sells, because if you say sell, you'll piss off the company. And because seriously, you want to go out there and participate in Delta's next bond offering, and your analyst is saying your company sucks, You really think I want to work with the company that has the analyst that's telling me that I'm a bunch of fools? There's other banks out there. Thank you very much. So hold can be sell, right? But what's interesting is I articulated a story that the real people on Wall Street, they're all on the bull side. They're in the buy category. I'm not saying they're right. Now, I'm saying that we did superficial analysis, and I might want to go get a couple analyst reports if I'm really doing this for my group project. I want to see what they actually have to say, what's their story, and then do I believe them, right? So I'm not saying that we made the right decision here, but that's what I'm saying. Like, different people are interpreting this information, and we lack insight that they have. What are we missing? Because that's the other thing. If they are closer to being right, and we made some superficial judgments, then that's really bad for us, right? Because then we're not going to look good and we're going to be uninformed. That's what I mean by bad analyst behavior, because it was really easy for us to come up with a group consensus, and I whipped you up into that sell frenzy, and it wasn't hard to justify that, but I don't really know. This is what I mean by bad analyst behavior. It's really easy to be a bad analyst. Right? It's a far different cry when you're doing a Harvard Business School case, because then the academic person selects a case where they know proves their answer in a very controlled data environment. Here, we're in the mud. Like this is sticky, it's uncertain, it's messy, there's a lot of asymmetric information going on, and that's, to me, what's interesting. But you always have to explain stuff, and sometimes you look at it, you're like, my initial thought is, all right, this is going to be a bad story, and then I realize everybody's going the other direction. If nothing else, what am I missing? That should inform me that maybe I'm missing something. I have biases that could be wrong. Or maybe you're like the guys in The Big Short, and everybody else is drinking the Kool-Aid of the rise in the airlines, and they really haven't thought this through, and there is going to be a crash in the future. All right, but then you got to have the courage and the convictions to hold on to that. Okay, and that's hard to do as well. So when you do your projects, now this was 30 minutes, you guys have 3 weeks, but this is what I expect, that you're going to condense it to a couple of minutes, you're going to condense it to a few pages, but this is what you got to do the work so that when we listen to you, we believe you, or at least think it's a reasonable story, and what is the story behind the numbers. So here's going to be the practice. So again, at about 3:30 today, homework, whatever it is, the next one, 8, is that 8? Homework 8 is going to go online. I'm going to give you another company. It won't be the airlines. It'll be somebody else, somebody you're probably familiar with. And then what you're going to have to do is basically this analysis turned in 4 spreadsheets. Spreadsheet number 1 is the as-is, right? Just what we just did here. Spreadsheet number 2 is the bull. Spreadsheet number 3 is the bear. Spreadsheet number 4 is your target. Because that's the point. I have 3 data points. I have the current share price, I got the top of the range, I got the bottom of the range, I got the assumptions that explain all 3, and then the target is where am I in that, and you should use the word continuum. Right? Because even for the bull side, and I say my bull is 80, it doesn't mean that I think 80 should be the stock price. It could be 70. But I think it can get as high as 80 in a rosy scenario. Or, as I said, what is my range? And then where do I fall in the range? It's very quickly to iterate through those spreadsheets, because you're only talking about 12 variables, as I'm really asking you to focus on right now. You're probably not going to change the tax rate too much, but maybe you do. Maybe you think that, hey, one of my scenarios is that Bernie Sanders is going to win, and Bernie Sanders is going to raise taxes on everybody, and that's going to really hurt the tax rate, because Delta's tax rate is going to go even higher, and that's going to really hurt the airlines. Right? I'm not saying a lot of people would necessarily immediately agree with that strategy, but I'm just saying you might come up with a different scenario with taxes, but realistically, I think you'd focus more on the other 2. Right? So come up with a reasonable tax rate, think through the other variables, and here's the other thing we didn't do. Think through the very long-term growth rate. Because I didn't talk about this, but I left the 3% long-term growth rate alone. And I'm assuming that if they're growing 3% now and they're kind of growing with the economy, 3% didn't be unreasonable. But that was another assumption I've implicitly made without articulating it. So what you got to realize is that you're making assumptions implicitly, and you don't even realize you're making assumptions. And you got to take a step back and detach yourself and try and realize why you're saying what you're saying and then articulate that. It's a skill. It's really hard to do. But if you can start developing it, it becomes very valuable. Okay, so that's what we're going to continue to practice. So as I said, individually, Monday, you turn in by 10 a.m., new company, that scenario, and then 500 to 1,000 words. basically writing all your assumptions. Why? Write up the why for the as is, write up the why for the target, write up your rationale. And we'll talk about during Monday's class. Have a great weekend. See everybody on Monday. I just recorded this. It'll be posted on YouTube.